This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back. So we're going to do another discussion on exits. I want to talk about ADX and how I use that in conjunction with what I'm going to discuss here. So last week I discussed exiting on short-term trades, and the approach for that is you're basically looking to buy compression and then sell expansion when you're short-term trading. So you get a couple strong bars in your favor. If you're short-term trading, that's really how you want to exit a short-term trade. You don't want to trail a stop. You don't necessarily want to milk the trade. You're looking for a quick burst in your favor. And I would view that on an intraday basis for the most part, as well as short-term like swing trading. If I'm using a daily bar or something like that, and I'm looking at a compression pattern that expands in my favor, I just want to exit. I don't want to milk that for everything it's worth. The numbers just don't add up. For the greater part of the early part of my career, when I was really trying to do a lot of short-term swing trading, I gave back so much in profit. It was the most frustrating thing that I came across, which is that, you have a good trade, you see it correctly, it moves in your favor, and you take like a small partial profit, and then you trail a stop, and then the balance is sitting there, and it comes all the way back, and basically you break even on the balance. And you look at what you would have done if you would have been a little bit more aggressive at taking profits. And I got to tell you, man, it was a frustrating time until I figured this out. It was pretty frustrating. So I want to make sure that is ingrained in your head. If you're a short-term trader, you take profits, don't trail a stop. Now, when it comes to trend trading, I think it's the exact opposite. I think you want to take minor profits, partial profits, and I call it, scale and trail. Don't be real aggressive and feel like you have to nail the very top every single time. Just be consistent with your exits. And when you see signs that maybe the momentum is slowing, then you could be a little bit more aggressive in terms of your exits. But I rarely recommend just taking an entire profit off the table. I much prefer to scale out and then be stopped out of the balance when the stock actually reverses its trend. So let's go ahead and get into this example. What I'm going to discuss today, I have done some videos on taking targets using what I would consider to be a really consistent approach of looking at how much risk you take and then scaling out at those levels of risk. So just to give you an example, if you risk $5 in a trade and you get a move in your favor of $5, then you want to do something. I like to take a partial profit, 20, 25%, and then maybe raise your stop a little bit. And then if you get another move of $5, you do something else. Now, you might not take a profit at 2R in this instance, but you might raise the stop all the way to a break even then. And then at 3R, I would consider taking another piece. So now maybe after you've gotten to 3R, you've taken half of your original entry of the position off, and then you're trailing a stop on the balance. Potentially, if you want to make for a really big win, then you wouldn't take any more partial profits from there. You would just trail a stop. But there are times when the longer term trend, and this is what we're going to discuss today, where the longer term trend might not have that big base with the ADX telling you that there's a multi-year move in place. And if that's the case, then you have to have some other things that you're looking for. So let's go into this Alcoa example. So what I want to explain is, so we get this move to the downside, and then look at how this reverses. So you see how this is not a big base turnaround. Now, I'm going to give you an example. Let me just pull up ON. Now, if we look at ON and look at this move, how it went sideways for a few years and then broke out of this base. When you look at the monthly chart, and then you can see it on the weekly, big, long, sideways pattern you break out of. When I see that, I'm more inclined to be looking at levels of risk and scale and trail, and don't get overly consumed by what's taking place in the momentum conditions, because a big base like this typically will have, a decent amount of upside as this has had. So this is about more than doubled from the time it broke out. And so anyway, I think this is a good example of something you don't really want to mess with. But if we go back to Alcoa, notice the difference. You don't have a big base. You actually have a stock that went down and V-bottomed off the low and has now worked its way all the way back to the prior high. So in this instance, I'm going to be a lot more sensitive to what's taking place in the momentum conditions, and I'm looking for an exit in a stock like this. So it's a fine distinction. Go back and look at ON, look at how much of a base there was, look at how strong the ADX condition was, and when we have those in place, I want you to be more of a scale and trailer, meaning you take a small piece, trail a stop, and you're giving it a decent amount of room with the stop. You want to give it room to breathe and see if it'll keep trending to the upside. And then eventually maybe that ADX finally dies out, and at that point you'll get stopped out of the trade for the right reasons. So in this case, I've got Alcoa, and as it's working its way up, I'm going to focus in on the weekly chart. So, look at how this turned around, moved up, and then we had really good ADX. I mean, this is strong ADX condition here. As we're making a high here, pull back, and make another high here, and pull back. I mean, those look really good. And then if you notice what happens is this made this last move up, and you start to get into this problem area. Notice what takes place. ADX can barely get itself back to 25. Okay, now that's a pretty strong move here. The stock went from 37 up to 55, and you couldn't get ADX back above 25. Now, MACD is making a double top here. If you see this, it made about the same peak, and while price is making a higher high. I still consider that to be sign of divergence. So you're making a double top in MACD and a higher high in the price. So I would consider that to be divergence. But what's much more glaring is when you make a move up, especially when you're coming into this big price resistance zone, and ADX can't get above 25. Now, what's important about this is the fact that we were well above 25 and showing a lot of strength in the trend on these first two pullbacks. And then you make another move to the upside and you can't get above 25. So this is a sign of exhaustion, in my opinion, and something we need to be on the lookout for to be a lot more aggressive. Now, if we go back to the discussion on individual bars that I have discussed in the past, and notice what took place at the peak. We got a big green bar right up into this resistance area, a little bit stretched away, but not enough to make me feel like, oh, I got to sell the moment this bar comes out here at 55. But then right after that, you get a selling bar. You get an up bar and then a down bar, and you basically retrace everything you made on the up bar the next week to the downside. So to me, that's a lot of confirmation in what I'm seeing in ADX. The ADX is saying, so we start to evaluate what's going on here, and you can say, all right, I'm up into a resistance area that was a pretty big problem back in 2018. So that's point number one. Point number two, I've moved up and I had strong ADX, and now I don't have any sign of real strength in ADX. ADX is telling me that the buyers have lost a lot of power here, and they don't have as much interest in the stock up here. So that's two. And then the third thing is the price action. The price action shows a pretty good buying stampede up into this resistance, and then the following bar, guys take advantage of it and sell down into it. Now, this hasn't really broken down yet. I just have early warning sign, but that's a pretty good early warning sign. If I have a profit in this, especially if I bought it down in the low 20s or something like that, and I've been trailing a stop, and I see a big move like that with a reversal into resistance, I want to be a little bit more aggressive. So let's just say, if whatever I have left, I want to make sure I'm selling at least half, if not 3/4 of the position that I have left. And then I might just trail a stop using a trend line, or I might use the 18-week. If we break the 18-week, that would be kind of the condition that says, okay, this trend is really over. But I want you to take advantage of this reversal pattern in ADX. As a stock is showing strength to the upside, if you get this signal, I think you can be a little bit more aggressive. Now, if this happens in a stock like ON that has a big base in it, and it's a big, huge base, then I would be a little bit more reluctant to be really aggressive unless I've made big, significant profits in it. Like if it happens after it's been up 100 or 200% and you get this signal and the ADX has been confirming the whole way, then I would tell you that, okay, I'd be willing to listen to this signal and maybe just go ahead and take the final profit. But when I have a big base like this, I'm more inclined to want to let it trend and not necessarily be too focused on the momentum conditions. I want to try and milk that initial base when I have low ADX breakouts like that and they have big sideways lines before they break out. So I hope this makes sense. In a stock that's more of a V bottom coming back into resistance, you want to be more sensitive, especially to the ADX signals and when ADX is not confirming. And then you want to go down to your bars, individual bars, and focus on these reversal patterns. So that's going to help you really get a lot better, I think, at exiting at the right time. Go ahead and post any comments or questions. We'll see you next time.